Investing in real estate involves purchasing property to generate income, build wealth, or achieve long-term financial stability. Real estate is a popular investment option because it offers tangible assets, potential for appreciation, and income through rent. It can also serve as a hedge against inflation since property values and rental income often rise over time. There are several ways to invest in real estate. The most common method is buying residential properties, such as houses, apartments, or condominiums to rent out. For example, if you purchase a property for $300,000 and rent it out for $1,500 per month, the rental income can cover the mortgage, property taxes, and maintenance costs, while also providing you with additional cash flow. Over time, as property values increase, you can sell the property for a profit or continue earning rental income. Another option is investing in commercial properties, such as office buildings, retail spaces, or warehouses. These properties often provide higher rental yields compared to residential real estate, but may require more capital and management expertise. For instance, leasing a retail space to a business on a long-term contract can provide steady income, but the risks include economic downturns or tenant defaults. You can also invest in real estate investment trusts, REITs, which are companies that own and manage income-producing properties. REITs allow you to invest in real estate without owning physical property, offering a low-cost and liquid way to diversify your portfolio. For example, buying shares in a REIT focused on apartment complexes means you earn a portion of the rental income generated by those properties. REITs are traded on stock exchanges, making them easy to buy and sell. House flipping is another strategy, where investors purchase undervalued properties, renovate them, and sell them at a higher price. While this method can yield quick profits, it requires significant time, effort, and expertise in property markets and renovations. For example, buying a fixer-upper for $200,000, spending $50,000 on renovations, and selling it for $300,000 could result in a $50,000 profit, minus transaction costs. Real estate investing offers several benefits. It provides passive income through rent, potential tax advantages such as depreciation deductions, and diversification for your investment portfolio. Additionally, real estate has intrinsic value, as it fulfills a basic need for housing or business operations. However, real estate also comes with challenges and risks. Properties require ongoing maintenance, and managing tenants can be time-consuming. Market conditions, such as economic downturns or oversupply, can reduce property values or rental demand. For example, during the 2008 financial crisis, many property investors faced significant losses due to falling home prices and foreclosures. Additionally, real estate is relatively illiquid compared to stocks or bonds, meaning it can take time to sell a property when you need cash. Financing is another key consideration. Many investors use leverage, such as mortgages, to purchase real estate. While this can amplify returns, it also increases risk if property values decline or rental income doesn't cover the loan payments.